Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. Now in this video I'm going to cover mainly two things. First of all, why I am expecting another leg down in the near term in the S&P 500, and secondly how I'm going to trade that and how I'll be expecting a bounce again in the near future, probably throughout the month of May. Before that, I do want to start with a quick review of what's happening on the weekly chart. I think it's always useful to have a longer term view before getting into the daily chart. So on this chart, we have a wedge pattern going from back here at the beginning of 2018 all the way to the all-time high here. And for those of you that have followed this channel since around this area here, mid 2019, I've been talking about this wedge all along this bullish run. I said that we'd likely see a heavy correction in proportion to the wedge pattern that we were forming. And the main arguments I saw against this analysis is that we already had that move down in the markets, and so people thought that was it for another few years before we have another correction. And that is exactly where their mistake is. This is part of the topping pattern that we've seen over the past couple of years, and this is something we saw in 2000, this is something we saw in 2008. We have increased volatility towards the top of the bull market. And so ever since here, when I was trading in 2017, 2018, I saw something different about the markets. We were in a grind for many years before, and then when we saw huge moves up, huge move down, this is where the volatility started kicking in. And this was the beginning of a topping pattern for our bull market. This is when the volatility starts picking up. You know that the bull market is less stable. What you want to see in a bull market is grind action like this, not volatility. So the question is, did this wedge pattern play out to its full extent? And we can measure this. If you don't know, the measured target of a wedge pattern like this is the widest part of the wedge. So you take it from the top all the way to the bottom. This is one way of measuring it. And then you take this distance and take it from the break all the way to the bottom, and that is your measured target. And so we fulfilled this measured target. We even overshot it, and now we're back to exactly the same level that we initially measured out from the break. So why, from a technical standpoint, just the technical standpoint, we're going to ignore the fact that everything is shutting down in the economy, and we're just going to take a look at the charts. Why am I expecting more downside? And again, this is something I've been saying for a while now, and that is the break of this bull market trend line, which has much longer term implications and has damaged the bullish case for a long time now. Now, the last thing I wanted to say on the weekly chart is the fact that I was watching this bullish engulfing candle. This can be a very powerful reversal pattern. We had the entire body of the green candle here engulfing the previous candle. So this can be a powerful reversal pattern for the bullish case. The problem is that we needed a follow through for that to happen. And so having closed the weak red actually cancels out this bullish engulfing candle. It's not going to play out. Before I go on, make sure to like the video. It helps out the channel massively, and so that makes my time much more worth it. So another thing I wanted to cover on the weekly chart is this MACD reading here. And you can see the MACD is starting to dip below the zero level. This is the zero, the middle of the MACD indicator. And you can see we're getting into bear market territory. The zero level actually is a pretty good indicator of whether we are in a uptrend or whether we are in a downtrend. Now this correction, I consider it more as a whipsaw signal because you couldn't have traded off of this reading. And so just like any good indicator, you do have whipsaw signals like we saw here. But let's go back a little bit further. We can take a look at 2015, this small intermediate bear market where we saw this reading go below zero right here. And so that was your signal to get out of the market, and it went back above zero here. So that was your signal to get back into the market. So you would have more or less skip that entire bear market. And one more example, we can go back to 2008. Where did we dip below the zero level? We dipped below the zero level right here. And so that was your signal to get out. And we came back above the zero level here. So that was your signal to get back in. And you can see throughout this entire period, we were below the zero on the MACD. And so that was, for long-term investors, that was their signal to get out of the market and not to be back in until we're back above the zero level. And so if you're a long-term investor, you can definitely use this as an indicator to be in or out of the markets. And so what's going on right now with the MACD definitely has longer term bearish implications, just like the break of this bull market trend line. Now we're going to jump onto the daily chart, and we're going to see what's going to be happening in the shorter term. So on the daily chart, we first need to place our downtrend line. Initially, we had our downtrend line like this. We had two reactions here along this downtrend line. And on the hourly chart, this was a valid trend line until we started breaking above it slightly. We had a slight break, then we came back below. So this price action actually invalidates this trend line. So we can clean it back up and put it like this, and we have a valid trend line with 1, 2, 3, and now 4 reactions off of this trend line. Do I think we're going to break it to the upside? I favor a no. Obviously, anything can happen in the markets, and I can't predict what the Fed will come out with tomorrow. But as I said in my last short-term video, I think this move right here was overextended. We lost momentum to the upside. This 260 level being broken with not much conviction. And this is one of my favorite ways to trade. When a important level is broken and I see that it doesn't have enough conviction and that we see divergence on the hourly chart, which we did have right here, I'll expect a false breakout. And that's exactly what happened. We came back below this level, we broke it, so we managed to enter a short position before the end of the day. You can see we closed red here, and then we gapped all the way down. And right now we're still hovering around here, but I do suspect again that we'll see more downside and come back and hit our 238 target, which is, you can go and check out my video, not the last one, but the one before, and I cover this trade idea on a break below 2600, come back and visit 238. And so we're going to wait for that. We're going to wait for a move down to the 238 level. And when we get there, which I strongly suspect we will, then we're going to watch whether we break this support level, this support zone, and I put another trend line here, another support level here, the 235 level. And I think this support zone is what we need to watch for more downside in the future. Now, of course, anything can happen. We could reverse here, break the trend line. Anything can happen in the stock market, but I do try and give you guys my opinion, how I suspect things will happen. I'm not always right, and I think that's something some people should remember. No trader is always right. We have been extremely successful from the top here. We managed to trade almost the entire move down, but that does not mean that I'm not going to be wrong in the future. So keep that in mind when you're watching any trading related videos. So again, what I suspect will happen in the next few days is as follows. I think we're going to hit this target and likely go through this support zone. And if we do manage to break to the short side, we have a gap here that we formed at the bottom. And so that's going to accelerate some selling. And I think we're going to retest those lows and even make lower lows, get to our first bear market target over here. I think the selling will accelerate as we go down. So this is not the first time we're going to see this. We've seen this before in this downtrend. Selling has been very unimpulsive so far on this down move, but I think as we hit this target, then we're going to have a bigger gap fill, and then we're going to have a big massive drop all the way to the target over here. So the selling accelerates as we go down, and that's something we've seen over and over in the past. When you have a leg down in the market, there is more and more panic as you go down. And that's, again, something we saw here. Very small selling days here, small red day, another small red day here. And then we have more accelerated selling and bigger moves all the way down past important support levels. So that's what we're likely to see in this move down. Now, where do I think we'll stop? I'm going to zoom out a little here so that we can see the rest of our targets. I'm going to show you what these levels correspond to. I'll zoom out a little bit here. And you can see the 2015 support zone here. We've got the top of the consolidation zone. We've got the bottom here at 1850. And I added this support level here smack down in the middle. And you can see we have many reactions along this support level. And I know the markets love round numbers. This is the 2000 level on the dot, the 2000 level. This is a strong support level. So having a reversal of the 2000 level is absolutely possible. So let's go back to where we are now. But I think the further we go down, the more the reward to the upside is elevated. And I'm going to show you what I mean. As we go down here, the MACD is very likely to do something like this. We're going to see the MACD turn over. And then it's going to look something like this. And so we'll have big fat divergence on the daily chart. We'll be able to draw this contraction line here. We'll still have this downtrend line running from the top. And so we'll have a beautiful wedge pattern to trade off of. And so a combination of divergence on the daily chart, a wedge pattern, and strong support levels, I think that's going to fuel a nice rally all the way to backtest this 238 level. And so on the MACD, that would look something like this. So it's very difficult to say exactly where we'll reverse right now. I think we need to see how the price action looks as we go down, how impulsive it gets as we go towards this first target. Each target at each support level, I'm going to be adding to my long position. And for those of you wanting a buy signal before going long, which is something I always look for when exposing a little bit more aggressively, and that would simply be a break of this trend line. If we respect this trend line, if we don't break it until we get to those support levels along the way, then you're going to watch out for a break of this trend line, because that is going to be a powerful buy signal for potentially a multi-week rally to resistance. So that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.